Following the moves of big investors can feel like getting a bit of a peek behind the curtain, right?
Right.
Hinting at these potential shifts in the market narrative that you might not just see from the headlines.
Exactly. It's like you get a shortcut to understanding what some really experienced people are thinking, not based on what they say necessarily, but where they're actually putting their money.
And today, that's exactly what we're diving into. We're looking at a recent filing from billionaire investor Dan Loeb and his fund, Third Point.
Yeah, specifically their Form 13F. That's for the first quarter of 2025. It's basically a required report for big investment managers.
Right, showing what stocks they held, what they bought, what they sold.
And it's due 45 days after the quarter ends, so May 15th was the deadline for Q1. We're looking at fresh data here.
Okay, so we've got the latest info, and the big headline from Loeb's filing, at least based on the material we looked at, is a really significant pivot.
Yeah, quite striking.
He completely sold off his entire stake in Tesla. Gone. And at the same time, put a lot of money into NVIDIA.
A huge shift, selling out of a position he'd built up just in the back half of last year, and then, piling into what everyone calls the top AI stock.
So our mission today is basically to unpack that. Try to understand the potential reasons why, based strictly on what our sources tell us about these moves and what it might signal about the stories around Tesla and NVIDIA right now.
Okay, let's get into it.
All right, so starting with Tesla. He didn't just trim it, he dumped the whole thing 500,000 shares, and he'd only just built that position in Q3 and Q4 of 2024. So why the quick exit? What do the sources suggest?
Well, a few potential reasons pop up in the material. One, maybe the simplest explanation is just taking profits.
Okay.
The sources mentioned Tesla's stock had a pretty big run recently, even doubled briefly after some political news. And Loeb's average hold time, according to this info, it's about 13 months. So maybe he just decided to lock in the games.
Plausible, a tactical move. But the sources dig deeper too, right? Beyond just cashing in. There's talk about Elon Musk's focus potentially being stretched a bit thin.
Yeah, spread across multiple ventures. They even mention this role, a special government employee for Department of Government Efficiency. The implication being maybe less focus on Tesla itself.
Interesting. And then there are the concerns about Tesla's actual core business, the EVs.
Right. The sources point to signs of strain there. Like EV revenue dropped 20% in Q1 2025 compared to Q1 2024.
Wow, 20% year over year. That's pretty steep.
It is. And adding to that, vehicle margins, how much profit they make per car, have apparently been trending down for 2 years.
2 years? Why?
Attributed to price cuts. Maybe needed because competition's heating up, or maybe overall EV demand is softening a bit. Either way, it seems to be leading to higher inventory.
Okay, and here's something I found really striking in the sources regarding the financials. They talked about the quality of Tesla's earnings.
Ah, yes. The regulatory credits and interest income point.
Exactly. Highlighting that over half of the pre-tax income in that March quarter didn't actually come from building and selling cars. It came from these automotive regulatory credits.
Which they get essentially for free and can sell to other car makers.
Yeah, and interest income.
Right. And the implication drawn in the sources is pretty stark. Take those away, and the core business, selling cars, would have actually reported a pre-tax loss.
That definitely paints a different picture of the underlying health, doesn't it? If the main business isn't profitable on its own, that's a potential red flag for some investors.
For sure, especially those focused on fundamentals. And then there's the final piece mentioned, the unfulfilled promises.
Right, like level 5 full self-driving being supposedly 1 year away for, 11 years now?
And robotaxi targets from 2019 that haven't happened, Cybertruck demand maybe not meeting the initial hype, things like that.
So if your investment case relies heavily on those future breakthroughs and they keep getting pushed out.
Exactly. You can erode confidence. Makes the current valuation, which might have those future hopes baked in, seem a bit shaky.
Okay, so that lays out a pretty clear picture from the sources on why Loeb might have sold Tesla. Core business challenges, maybe some execution concerns. Now, let's flip to the other side of the trade. NVIDIA.
The big buy.
Yeah, while selling Tesla, he scooped up 1,450,000 shares of NVIDIA in Q1, worth around $196 million, the sources said. And he'd traded out of it before, so this is a re-entry.
And it's such a contrast in the narratives presented in the sources, right?
Yeah.
NVIDIA is consistently described as, like, Wall Street's preeminent AI stock.
The main beneficiary.
Pretty much the most direct way to play the whole AI revolution that's happening.
And the sources pinpoint why. It's about their hardware, isn't it? The GPUs, Hopper, and now Blackwell?
Yes, seen as the essential brains for all this stuff. AI data centers, generative AI, training those huge large language models, the LLMs. They're the preferred choice.
And there's this dynamic of scarcity, too.
Big time. The sources emphasize that demand for these top-tier AI chips is just overwhelming supply right now, even with manufacturing trying to catch up.
Which lets NVIDIA command premium prices?
Exactly. And that flows right through to their gross margins, which are really high.
So they've got the key hardware and can charge top dollar because everyone needs it. But the sources also mention something else, beyond just the chips. The CUDA software platform.
Ah, CUDA. Yes, that's crucial. It's described as this software toolkit that helps developers really get the most out of NVIDIA's GPUs, build LLMs, other AI applications.
And the sources called it an anchoring tool. What does that mean, practically?
It basically means it creates lock-in. It's a sticky ecosystem. Once companies and developers invest all this time and effort building on CUDA,
They're less likely to switch to a competitor's hardware.
precisely, switching becomes really difficult and expensive. It builds a strong moat around NVIDIA's business. It's not just selling hardware, it's building this whole world around it.
Okay, got it. So powerful hardware, pricing power, and a sticky software ecosystem. The sources also mentioned valuation briefly.
Yeah, they noted its forward PE ratio, price to earnings, dipped to around 19 near the end of March, which, given NVIDIA's crazy growth rate,
Looked potentially quite inexpensive.
right, for a growth investor, that combination, market dominance, pricing power, ecosystem, maybe an attractive valuation relative to that growth that looked pretty compelling based on the source material.
Okay, so now let's try and connect these dots. Loeb exits Tesla, dives into NVIDIA, but we need to remember, as the other sources point out, not everyone is selling Tesla. The bull case is still alive for some.
Definitely true. And those sources acknowledge something important.
Oh.
If you just look at Tesla as a car company, using traditional metrics like EBITDA compared to, say, Alphabet,
It looks ridiculously overvalued.
yeah, it doesn't add up.
Yeah.
Which really tells you the bull case isn't primarily about selling cars today.
It's almost entirely about the future potential, isn't it? Specifically, robotaxis. One source even cited an analyst model where robotaxis made up like 88% of the potential value way out in 2029.
That really highlights how speculative it is.
Yeah.
You know, management confirmed unsupervised FSD on Model Ys in Austin.
Yeah.
Talked about Cybercab production starting in 2026. But the sources rightly point out there are still huge questions.
Scalability, regulations, can they actually execute on this massive vision?
Right. They even mention Musk himself, joking about being the boy who cried FSD, after saying it's just around the corner for so many years.
Yeah, that history doesn't help build confidence. But, okay, the sources do provide some counterpoints, reasons for optimism for the bulls.
They do. Tesla is the established EV leader. They have scale, which helps with costs. And interestingly, competitors like Ford and GM are actually pulling back on their own robotaxi projects. GM apparently saving $1 billion a year by doing so.
So less competition maybe, and then there's Waymo.
Right. Waymo, Alphabet's company, kind of proves the concept works, right? That people use robotaxis. It's technically possible, commercially viable in some places.
And the argument is maybe Tesla has cost advantages or just way more driving data than anyone else.
Potentially. So you have this real tension. Loeb focusing on current issues and maybe past execution misses, while the bulls are betting on this massive, speculative, but potentially game-changing future tech.
And we should also touch on the risks for NVIDIA mentioned in the sources. It's not all smooth sailing forever, presumably.
No, definitely not. The sources bring up the historical pattern. You know, these next big thing technologies often have a hype cycle, sometimes followed by a bubble bursting.
That's always a risk. And what about actual adoption?
Yeah. The sources point out that while companies are buying the hardware, many might not have a clear AI strategy yet, or aren't actually seeing big profits from AI today.
Suggesting investor expectations might be running a bit ahead of the real-world results so far.
Could be. And then there's competition. As others develop their own chips or more manufacturing comes online, that GPU scarcity could lessen.
Which could hit NVIDIA's pricing power and those amazing margins eventually.
Down the line, potentially, yes.
So for you listening, what does all this mean? Seeing a big name like Dan Loeb make these kinds of sharp moves, it really throws into relief the different ways people are valuing companies right now.
It's a perfect example, really. Weighing the tangible stuff, current business performance, immediate challenges against the more speculative promise of future tech and market shifts.
It's this fascinating tug of war playing out with billions of dollars.
Absolutely. And these 13F filings, they're like a little window into how some very smart investors are trying to navigate that uncertainty.
So to sum up, Loeb gets out of Tesla, maybe seeing near-term headwinds and execution risk while jumping into NVIDIA, the clear AI infrastructure leader for now. But the Tesla bull case, as the sources show, still hinges on that potentially huge but unproven robotaxi future.
While NVIDIA, despite its dominance, faces its own risks around hype cycles, real-world adoption translating to profits, and eventual competition.
It's complex, driven by totally different bets on what matters more, today's reality or tomorrow's potential.
Exactly. So the final thought maybe for you is, look, what did it really signal when big money makes these sharp pivots? And maybe more importantly, how do you personally weigh that tangible reality of a company now versus the speculative promise of what it might become?
Definitely something to mull over.